You are watching Market Watch, the brief overview of the key events from the world of finance. Extremely unexpected results of updated forecasts from voting members of the U.S. Federal Reserve's Open Market Committee. On the eve of the quarterly forecast update, investors and traders discussed the revision of the consensus forecast from 3 key interest rate cuts to 2. The reason for such expectations was the latest data on inflation and the labor market, indicating the strength of the U.S. economy. However, representatives of the financial regulator look at the current situation from a completely different angle, seeing the prospect of a slowdown in the economy, which in turn will reduce the rate by 75 basis points. The market reaction indicates that the Fed was able to surprise investors and traders quite a lot. The lack of changes in the forecast, in terms of the reduction of the key interest rate, is a strong bearish fundamental factor for the US dollar and bullish for the stock market and cryptocurrencies. Willingness to lower the rate indicates that money will become cheaper, therefore, it is advisable to abandon protective assets and invest in riskier ones. Investors and traders understand this. As a result, key stock indexes updated historical highs the few hours after the publication of the updated forecast. And now let's move on to the US dollar to Japanese yen currency pair, which has one of the greatest potentials. The overall strengthening of this currency pair occurred due to the huge difference in the yield of US and Japanese government bonds. According to the updated consensus forecast of voting members of the U.S. Federal Reserve's Open Market Committee, by the end of this year this difference may decrease significantly, thereby making the Japanese yen more attractive. Given the undervaluation of this currency, demand for it may increase, thereby compensating for the low profitability of debt instruments denominated in it. At the moment, the pair's quotes are held at historical highs and about 2,300 points above the minimum of the previous year. Also, the largest cryptocurrency benefited from an unexpectedly dovish forecast on monetary policy. If there is evidence of a slowdown in inflation in the United States in the next few weeks, demand for Bitcoin may increase significantly. Indeed, in this case, the probability of lowering the key interest rate will increase, thereby supporting risky assets. Key U.S. stock indexes also took advantage of the moment, updated their highs, thereby providing support to the cryptocurrency market. That's all I have. Follow the news carefully and be prepared for all the surprises of the market.